Boom, boom. Good morning and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. We won't be doing the questions and answers at the end of the show today because it's Dad Day at my son's elementary school, so I will be going out there to participate in drinking milkshakes and eating hamburgers. But today on the show, we are still going to cover some things. We're going to be talking about the interest rate hikes that are supposed to happen this week and what the probabilities on them and the levels on them are and how that will affect, of course, the cryptocurrency market. Some signs from over the weekend that, of course, we were going to experience the current dip that we are experiencing due to inflows into exchanges. We'll be talking about that just so you guys can start seeing how that all functions when you're trying to set your stop losses or whatever it may be, considering surrounding mining and your profitability, etc. Of course, we will be talking about mining profitability today, but the profitability is kind of a funny one. We might as well just call it a lossability at this point. And that doesn't mean necessarily that you should stop mining, though. We'll kind of discuss that a little bit. We're also going to be talking about the not one, but two different ETH proof of work forks because there's one we missed. Of course, Chandler Go and Justin Sun were both doing forks, and apparently they don't agree, so they decided to create their own forks because they're big old dummies trying to make money off of you and I think, at this point. And we'll be talking about crypto miners from the US and Europe staying put in Russia despite sanctions. Yes, that's really interesting. And crypto miner BitDeer bought physical safety vault Freeport for over 28 million. And the Terra founder Do Kwon has disappeared. Let's get into all of that and more right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. And welcome back, everybody. I'd like to remind you to go ahead and hit that like button, hit that subscribe button if you're not subscribed already, and make sure you share the video out. That's the best way to support the channel. Yes, we are back down to reality. What do I mean by that? Well, we're back down to our usual viewer counts and viewer numbers. And that means, yes, we are probably coming back down to reality for the crypto mining space, as well as getting settled back into that bear market. But don't fret, because there's still opportunity everywhere. And yes, I'll be looking for it, and I'll be sharing that opportunity, of course, over with supporters on sonofatech.locals.com, as not to flood too many markets, because right now, of course, with cryptocurrency mining, the floods are happening, right? Like the floodgate of GPU and hash power is opened onto networks that can't necessarily handle it. So we have to handle that with a little bit of responsibility, and that does mean we got to be extremely careful, but we are going to be sharing that over on Locals. But that being said, first things first, Team Black Miner version 1.67. Number one improvement, this released 6 hours ago, is improved performance for Vertcoin on NVIDIA and AMD. Pretty interesting coming from Team Black Miner. Also, we haven't seen Team Black Miner release something in quite some time, actually since July 20th of this year. Remember, for a while, they were releasing one like every day. Look at this, June 23rd, June 25th. Right? And so it's kind of fun to see them back. It's been a while. They removed a crash upon exit, and they added the ETH proof of work pools. They removed rejected shares mining Ethereum Classic on Mining Pool Hub, and they reduced CPU memory usage for Vertcoin. Now, obviously, like Vertcoin is one that you may want to check out. It's a smaller coin that not as many people are aware of. And it's kind of one of those things where these smaller coins, the networks that you want to support are going to be the ones that you shift over to. The nice thing about Vertcoin, of course, as well, is that it is a ground up Vert hash, meaning it's its own algorithm. And the interesting thing about that algorithm is that you can actually play video games on it while you mine, which is kind of what sets it apart. But we'll kind of get into that in a later video. We've talked about mining Vertcoin before. Maybe Team Black Miner has improved, of course, their algorithm, or their mining, their hash rates on AMD and NVIDIA to the point to where it's competitive with another miner. I don't know. I haven't mined Vertcoin in quite some time, but I used to just utilize the Vertcoin one-click miner that is their official Vertcoin miner. That being said, just an update. I mean, you guys will probably get this in more detail from other outlets today, but Terra founder Do Kwon is on the run, says Korean prosecutors. During the weekend, there was a lot of chatter about Terra founder Do Kwon trying to escape from prosecutors. He, however, took to Twitter to clarify that he was not on the run and has shown interest to communicate with government agencies. So it's kind of funny because it's like clickbait title, he's on the run, but he's not on the run because on Twitter he said he wasn't on the run. I hate these articles. Come on, Watcher.guru. Get it together, bro. He also claimed that he and his team were in full cooperation, for they had nothing to hide. Further adding to the said thread, Kwon said, "We are in the process of defending ourselves in multiple jurisdictions. We have held ourselves to an extremely high bar of integrity and look forward to clarifying the truth over the next few months." Per a recent Bloomberg report, prosecutors have raised the prospect that the Terra executive is trying to evade redress. Here, it is worth recalling that prosecutors issued an arrest warrant against Kwon last week and intend to arrest him for allegations that include capital market law violations. The prosecutor's office refused to comment on whether or not he planned to contact Interpol. However, it said in a text message to Bloomberg that there has been circumstantial evidence of escape ever since he left for Singapore, and that is why an arrest warrant was issued in the first place. In fact, another parallel report by the Yoap news agency cited prosecutors saying that the Terra founder was not cooperating with probes and had told investigators around August through a lawyer that he had no intention of appearing before them for questioning. In fact, in response to Kwon's "I am not on the run" or anything similar tweet, South Korean prosecutors said Do Kwon was obviously on the run. Okay, so South Korean prosecutors here are saying that he's obviously on the run. He's saying he's not on the run. It's pretty hilarious because now we have the internet just to watch these people say opposite things of each other over and over again. You gotta love it. And then have extremely confusing articles like this come out. This is very comical, right? Like I said, because we get to kind of like watch it on Twitter happen, right? A prosecution official said the news agency currently we are in the process to locate the whereabouts of suspect Do Kwon and apprehend him. The official further added that they will cooperate with local and overseas investigative bodies to get to the bottom of the case. All right, guys, so he's saying he's not on the run, but, you know, the agencies are saying he's on the run. Better watch out, Do Kwon. What you gonna do when they come for you? It's pretty rough stuff. I never, my position is like, I do feel like sometimes you just get yourself in a bad position and you're like, crap, why did I do that? And it wasn't ever necessarily something that you did on purpose. Like, I feel like initially a lot of people have good intentions and then those good intentions start going wrong and they put themselves in a bad position, and then it's like it's too little too late. I think like the hardest principle to come around to, for me, even like as I've gotten older, I've gotten better at this, but it's like this is always hard. Just like as soon as you realize you're wrong, admitting you're wrong immediately, and then trying to fix it, right? But in the case of like some of this stuff, that's still going to be like maybe not the best way to handle it, right? Like I've learned that as well, where you need to get like the lawyers to talk for you and do all that. I guess my only point, like when I kind of talk about this sort of stuff, is like I'm not necessarily sure that Do Kwon was doing anything intentional to screw anybody over originally, and then it kind of just snowballed into screwing people over, if that makes sense, right? You get yourself in a bad position, you just keep going. It's not a good idea. That being said, let's talk about crypto mining stuff. After I sip some iced coffee. Crypto miner BitDeer bought physical safety vault Le Freeport for over $28 million. The miner is looking to go public via an SPAC merger. Remember, this is the quickest way to go public. And what do I mean by that? Well, it's basically you are a company that's not public. You acquire a company that's public, and then that allows you to go public through a merger. And it's called like an SPAC. It's kind of a manipulation to go public. And for a crypto miner right now, it's probably the best way to secure capital, because as we've been talking about here recently, and this affects the entire crypto mining industry, the number one hardest thing to do, actually the entire crypto industry right now, the number one hardest thing to do, and it's going to become harder and harder and more difficult, is to raise capital. So this is kind of a way for a crypto miner to be able to roundabout increase their capital by basically going public through the easiest form or manner, regulation wise, to go public. And that's why they do this, okay? But crypto miner BitDeer Technologies has bought a maximum security physical safety vault Le Freeport for $40 million, Bloomberg reported, citing sources. BitDeer, which is backed by crypto billionaire Jihan Wu, bought the Singapore-based vault in July, the report said. Le Freeport is a repository for fine art, precious gems, and gold, silver bars from shareholders led by Swiss art dealer and founder Vez Bouvier. I can't probably pronounce that correctly. According to the report, Wu confirmed the transaction in a text message to Bloomberg. Le Freeport is a unique acquisition by BitDeer, which was looking to go public via a blank check merger. BitDeer was formed after the world's largest mining rig manufacturer, Bitmain, was split into two companies. Bitmain was founded by Ketan McCree Zahn and Jihan Wu, and was split into two after a messy battle between the two co-founders. Zahn kept Bitmain's design and manufacturing business while buying Wu's shares, whereas Wu kept BitDeer. BitDeer did not immediately respond to CoinDesk for comment. But like I said, what this is this is a way for somebody that's involved in cryptocurrency right now to go public in the easiest form possible and get some capital, because capital is like the most difficult thing to do right now. So, you know, as smaller miners even, it's really hard to stack up capital. Putting yourself in a position to where you can go work, obviously a day job to build capital that way is one way to do it. Having a YouTube channel and trying to supply, obviously, like value to your audience is another way that you could try to increase your capital. But even that, as we've seen, if it's about cryptocurrency, is going to be a little bit difficult to do as well. But maybe you could do it about different topics as well. You could also hopefully like work into real estate. I know that there's some people that are doing that got to that point. And then trying to reduce, obviously, like your power consumption, that sort of thing, if you're a power company or whatnot. There's lots of different ways, though, that you could. At a small level, though, it is getting extremely difficult. There are very few miners that are profitable Right now, Script kind of taking the lead. We'll talk about that here in a little bit too. But crypto miners from the US and Europe are staying put in Russia. This is an interesting turn of events. The war in Ukraine may have undermined many Russian companies, but not mining facilities. Clients from the West keep coming to the country for cheap power and reliable uptime. And here's kind of the funny part about that, right? Like, as we talk about what's happening in the rest of the world compared to Russia, is like, due to the war in Ukraine, we do have to acknowledge that essentially power costs are going up globally because of the sanctions on Russia. But the power cost within Russia is clearly, obviously, going to be lower because they're not exporting as much power to other countries. And so they can keep the power cheaper. And obviously, miners are going to migrate to countries with, lower power costs. This is a really interesting turn of events. It'll be interesting to see how the US and the European countries respond to this as far as regulations and so on go. After Russia started the war in Ukraine in February, the European Union and US expanded sanctions. Western companies fled Russia, leaving behind facilities, goods, and local staff. You would think the Russian cryptocurrency mining market, long popular for cheap Siberian hydropower, would feel the heat too. In April, one of the largest mining companies in Russia, BitRiver, was hit by US sanctions. That immediately affected BitRiver's business. Compass, a U.S. mining company, ceased doing business with BitRiver and reportedly tried to sell the hardware it placed in BitRiver's facility in Siberia. Remember, this was a big deal with Compass, especially because Compass's actual business model didn't allow BitRiver to send the units back to Compass themselves, because the actual owners of the equipment, remember, this is really funny, the owners of the equipment are the individuals that are basically leasing the space through Compass as a third party, which is then hooking them up with, obviously, like BitRiver. So it ended up being where it was up in the air of like whether or not these people were going to get their mining rigs back. And it's actually, I'm not sure, hopefully they tell us what happened here, but it sounds like it's still stuck in negotiations. Yeah, so here it says the machines got stuck in negotiations between the partners. Then Japanese bank SBI said it was out of Russia, meaning out of BitRiver's farm, as CoinDesk reported. However, no other Russian mining firms have been sanctioned so far, and clients from the EU and US aren't leaving in a panic. On the contrary, old clients have stayed and some new ones have come in, say people in the industry. Nothing changed. In crypto, people don't care about these sanctions. Everyone who has been working here keeps working, says Artem Araman, CEO of Chilkoot, a mining hardware reseller. The reason? Russia is still an attractive place for mining thanks to cheap electricity, even more so now when other previously popular jurisdictions have made life harder for miners. China outlawed mining last year, and Kazakhstan cut off power to mines for several months and then increased the energy costs with a new tax this year. There is nowhere else to go, he said. And this is really interesting. We're basically giving, man, I think like if you are the US or Europe, you should be looking at this strategically. You shouldn't be looking at this and going, okay, well, let's propose a ban on proof of work mining right now. We're not a big fan of Russia. We want to sanction it and just tell everybody not to participate. But if the prices are going to be super low and they're not going to ban proof of work mining, then what are you giving? Are you just giving Russia all of the power at this point? All of the control over the network? Do we end up having centralization of hash power moved to Russia? And then what have you done? Well, probably created a CBDC and tried to outlaw cryptocurrency, I suppose. But it's a really interesting problem to have here. Maytech, a German company, is operating a mining facility at a former abandoned factory in Irkutsk. There we go. One of the largest cities in Siberia. The firm currently has 110 megawatts of hosting capacity, of which 40 megawatts are unoccupied, and is looking to add another 60 megawatts before the end of the year. Dan Haas, Maytech's CEO and co-founder, told CoinDesk. This capacity, comparable to BitRivers, is in high demand among clients from Germany, the UK, the US, Canada, Iran, Japan, New Zealand, and other countries, as well as local Russian miners, said Maytech's head of foreign relations, Alexander Swid. Europe accounts for around 50% of the mix, and Russia up to 30%. The US makes up about 10%. And a big request for placement of specialized mining chips known as ASICs came from the US recently, Haas said. No client is leaving, Swid said. Even now, with the ruble stronger against the US dollar than it was before the war, and electricity prices, which are set in rubles, higher, Russia remains a preferable mining location, Swid said. Maytech started its mining business in 2017 in Austria, Haas said. However, electricity prices there were not attractive, obviously because in Germany or in Austria, in that entire area, they moved to basically trying to shut down their nuclear plants, shut down a bunch of coal, and then they were basically just buying power from Russia, ironically, right? But the collaboration was not satisfying, Haas said. According to him, the uptime on the facility was usually around 60 to 70%, meaning the hardware was running no more than 70% of the time. In 2017, Maytech moved to Russia, repurposed the abandoned factory into a mining farm, and signed a 65-year contract with Ergo, there we go, and Ergo, which is probably for like energy or something, the local power grid company, according to Haas and Swid. For several years, the company kept a low profile and didn't do any marketing, so clients had to find Maytech through word of mouth. The reason miners from the US and Europe are interested in Maytech's Siberian venue is that the local electricity grid has a lot of spare capacity. In the US, by contrast, the recent heat wave stretched power resources thin, and miners had to unplug a few times, noted Yakim, the chief financial officer of Summit Mining, an island-based mining company working mostly with customers in France. Summit Mining's business essentially started in Russia, Yakim told CoinDesk, when founder Matthew Vincent asked her to help set up his mining equipment there in 2019. Now Summit has hardware in the US, Canada, and Iceland as well, but Russian farms in those areas still host 40% of the 20,000 machines the firm is operating worldwide, Yakim said. All the machines in Russia were purchased before the war started in February of 2022, she said. So, the news of the war and sanctions did not worry Summit's clients, Yakim said. The matter hardly came up during Vincent's weekly Ask Me Anything AMA sessions. However, the firm decided to scrap a plan to build its own mining facility in Russia, which had been in the final stages of approval just this winter. In early February, the company was about to invest 1 million euros, about $1 million US dollars, in building its first mining farm in Russia, Yakim said. So far, Summit has been hosting its machines in venues owned by big Russian mining firms. She wouldn't say which ones, but after the war started, the project was shut down. It's not clear how far the sanctions will go, Yakim said. If something's goes wrong, it's not clear how to get money out of Russia and back to our European company. Now Summit only considers expansion into the US and Canada, Yakim added. So it does sound like the sanctions are affecting essentially expansion in Russia to me. I mean, clearly, like they're saying right now, that it's not, despite it, crypto miners are staying, in Russia. They're not moving out. But as far as like new projects going in, they're not doing that. Now, some of that could actually staying in could be technically influenced by the sanctions because, like I said, in the case of BitRiver, what ended up happening, which was kind of odd, is that you had essentially a bunch of mining rigs that were owned by individuals but leased out through, essentially Compass Mining. And it ended up being a weird spot to where kind of the rigs had to stay there because you couldn't get them out of Russia because Technically, BitRiver wanted to ship them back to the individuals, while Compass wanted to come back to Compass, and then Compass would try to put them or rehome them. But Compass was having issues with rehoming because, frankly, outside of Russia, right, and we talk about like availability of space, expansion for, of course, mining in the U.S. has been pretty difficult. There's a lot of stuff on hold, infrastructure's not ready, that sort of thing. So, if you just have the infrastructure already sitting there in Russia, and you already have these machines running, and you have these weird sanction issues that are causing you not to be able to pull those rigs out, then it kind of makes sense that the rigs are staying there. I don't think that this is necessarily like miners specifically like going against the sanctions, right? I think it's kind of almost a limitation of the sanctions being put in place that's preventing them from pulling out at this point. So is it a scary precedent? BitRiver was the first mining company to have the dubious honor of being listed on the U.S. Treasury Department's Office of Foreign Asset Controls list, and its case was different from other sanctioned crypto projects such as over-the-counter broker Souks, or So, and Chateau, I think, Exchange, and the non-custodial mixer Tornado Cash, all with Russian roots as well. BitRiver was not accused of any wrongdoing, such as money laundering. The problem was that mining companies help Russia monetize its natural resources, according to the OFAC press release from April. And this is where, everybody's going to come down on them and say, well, we can't have you monetizing any of the Russian natural resources or giving the individuals jobs over there. So we're going to put it in place. So it's pretty effed up when you think about it at the end of the day, because, if it was in the reverse, and this is just me thinking about it, and you're an individual that's in the country, like let's say sanctions get put onto the U.S., and then they're like, well, we're not going to do business with you as an individual because of something your country or your government is doing. You can just starve to death. It's like, well, that's a little effed up. That's how I look at it personally. Just in general, but this is the reason behind why they want to sanction, essentially BitRiver here. Quote, the United States is committed to ensuring that no asset, no matter how complex, becomes a mechanism for the Putin regime to offset the impact of sanctions, end quote, the document explained. MyTech took the news in stride. The company's main legal entity, MyTech LLC, is registered in the Republic of Georgia, and the firm owns two companies registered in Russia, so there is no risk, Swid said. We are working with lawyers specializing in global sanctions, and they said we're not violating any sanction at the moment, Yakim said. These days, miners working in Russia are hiding their actual beneficial owners more often than they once did, Chilkut Araman said, but the demand for Russian mining farms stays high. Some miners from the West left their equipment in Russia and quit, but others are sitting tight and continuing to mine, Nikita Vasev, founder of popular mining conference in Russia, Terra Crypto, told CoinDesk. Every 4 years, the Bitcoin network's software reduces by 50% the amount of new Bitcoin paid to miners for mining a block, making this business more challenging over time. Now it's an important time. Only 2 years left before the next halving, and everyone understands they need to work hard to make some money before the rewards are cut in half. Not a single client from Europe and America has left, Sergey Aristov, co-founder of a Russian mining firm BitCluster, told CoinDesk, adding that Chinese clients in the meantime are also willing to mine in Russia as ever. He acknowledged that the purely pragmatic issues have arisen after the war started and sanctions were imposed on Russia. As the country became more isolated from the global financial system and payments to and from Russia became problematic, clients from the West stopped importing new mining equipment to Russian mining sites. Plus, the extraordinarily high exchange rate of the Russian ruble against the greenback, combined with the low dollar price of Bitcoin, makes mining in Russia less profitable, Aristov added. When the war started, some of BitCluster's clients put on hold transporting their machines to Russia, but then everything resumed as usual. People look around, saw that the nuclear war didn't start, and got back to work, Aristov said. So it's going to be important to pay attention to what happens here, because kind of we have crypto starting to seep into global conflict essentially at this point in cryptocurrency in general, and we're seeing different approaches from everybody. Now, of course, initially what we saw, which was interesting, and a little odd, is a couple years ago or last year we had China ban cryptocurrency, right? They were trying to push their own CBDC, which is rolled out now, and we were like, okay, well, what we're seeing is, communist nations, nations like China, kind of like opposite of UN, I suppose, opposite of the US and the UK, that sort of thing. These kind of not warring nations, but opposing nations. But, in general, we're seeing like the Russian side and the China side presumably push against like the freedom and autonomy that Bitcoin offered, until it ended up in a position where conflict was in place. And then we ended up right where the country that controls the reserve currency, the United States, puts a bunch of sanctions. And to get around that, we end up seeing a bunch of Bitcoin and cryptocurrency being utilized by Russia. It's kind of funny how it's bouncing back and forth. What it does show us, I think in general, is that cryptocurrency has the power to dethrone reserve currencies potentially, and definitely put a big old wrench in the cog that is, international relations, and maybe potentially here in the future be able to serve as something that empowers the individual to still be able to like eat and take care of their daily needs without regardless of whatever these countries are doing between each other. I just find it kind of funny that we bounced from China banning it to now the US talking about banning it and Russia utilizing it, right? Like this kind of weird like circle of plays that are happening surrounding cryptocurrency is really, really, really intriguing to me, and I think it definitely deserves a deep dive. So I know I'm going to be staying up late reading about all of this and trying to figure out where we go in the future, because like I said, I do feel like we are at a crossroads between moving towards every single nation state having some sort of central bank digital currency and them controlling the public through it, or of course a free and open society with a financial system that is devoid of control from nation states and banks and all of that. And I think no matter what, either way it ends up going, I think it's going to be a little bumpy, so buckle up. We got a couple years to ride out to see how this plays out. But I think potentially we definitely see a very, very different world financially in 2030, whether that be complete control with CBDCs, or it be complete financial autonomy through something like Bitcoin, or some sort of weird mix of the two. I think this is where we are headed eventually. And I think the old days of cash and etc. will probably go to the wayside. Now, Ethereum proof of work sees replay exploit for the 200 ETH days after a rocky start. So if you guys aren't familiar, Ethereum essentially has ended up with two different chains, which we'll be talking about here in just a second. But this is an exploit on the ETH chain, and the exploit took place on a contract, however, and does not affect the main Ethereum proof of work network itself. So apparently this is going to be okay, but we are talking about faulty third-party stuff already happening on the network. Ethereum proof of work, the version of Ethereum blockchain that continues to run on a proof of work consensus mechanism, experienced a replay exploit over the weekend due to a faulty third-party contract. Developers of Ethereum proof of work were alerted of the issues and immediately took steps to rectify the problem. The blockchain was established as a fork of the Ethereum network, which switched to a proof of stake consensus mechanism on Thursday in an event known as the merge. The proof of stake network now continues as Ethereum. The replay exploit refers to the same transaction being duplicated on both chains when they're not supposed to. This means if a user transacted on Ethereum proof of work, the same was executed on Ethereum, which eventually allows attackers to illicitly trick smart contracts into releasing tokens from one chain, even as the actual transaction was executed on another chain. So attackers used the Omni bridge of the Gnosis network to conduct the exploit. Some 200 weighted Ether, ETH, was transferred through the bridge on Saturday, and the same transaction was relayed on the proof of work chain, resulting in the attacker gaining 200 ETH, or approximately $1,600 at the time. Faulty data from the ETH POW network's chain ID, which is something that we talked about, and I thought that the chain ID was resolved, but clearly it was not. And this was a big issue that was coming up quite a bit moving into it. So the faulty data from that chain ID used by a contract caused the issue, and that is coming from security firm BlockSec. A chain ID is a set of numbers used by a browser-based crypto wallet like MetaMask to sign transactions for the network. An incorrect chain ID causes transactions to fail because users aren't connected to the correct network. And we had a guide on how to connect to that network. If you guys want, you can reclaim or claim, if you have any ETH in your MetaMask, some ETH. But, that ETH is obviously going down in value quite quickly. BlockSec warned that the issue might eventually cause the balance of the chain contract deployed on the proof of work chain to be drained. Meanwhile, Ethereum proof of work developers said in a Sunday post that the attack exploited the contract vulnerability of the bridge and not the blockchain itself. We have contacted the bridge in every way and informed them of the risks, it said. Let me get some water. Bridges need to correctly verify the actual chain ID of the cross-chain messages the developers wrote. As such, the network saw glitches on its first day, with users stating that they weren't able to access the blockchain servers using public information provided by ETH POW. CoinDesk verified the claims and wasn't able to access ETH Proof of Work's web servers using those links provided. That was early on. Now we can access them now. ETH tokens stumbled in the past 24 hours following the exploit, falling some 37% and extending the weekly loss to over 80%. Now, of course, it's hard to determine on all of these things between, the actual coins falling and the projects themselves falling down, and then of course the overall market going down. I usually try to tie it as closely to like whatever Bitcoin's doing. So right now, for example, Bitcoin's down 2.84%, but Ethereum is down 5%. I would say that there is definitely less trust in Ethereum looking at that based off of that than there is with the entire market in general, right? So that's kind of like a brief way that I look at it. But it does get more interesting because ETH at least let you it was a copy pasta of Ethereum, but it let you basically act like you were still functioning on Ethereum to a certain extent. Like if you were a user, you're technically all your tokens, all your Ethereum moved over. But there's another one, and actually, so this is where things get confusing. The ETH token on Justin Sun's Poloniex is not the same as the one run by Chandler Go. And there's actually a whole other name for it. So we had to clarify this so that we understand what is happening, right? So the Forks ETH token dropped 70% on technical glitches, and early supporter Poloniex decisions to back a different little-known blockchain. So this is where things get weird. In stark contrast to the mostly flawless execution of the Ethereum merge, technical snafus and defections have marred the new fork blockchain by crypto miners aiming to preserve the old proof-of-work network. The project, tagged as Ethereum POW, fell flat right at the start as users complained about glitches in crypto exchanges Poloniex, where Tron, founder and early cheerleader of Ethereum POW, Justin Sun, is an investor, decided to support a rival proof-of-work fork. On top of that, it appears many crypto miners shifted their resources to focus on Ethereum Classic, as data suggests. And of course, everybody's completely aware that while Ethereum Classic has slower development, etc., it is solid and it has been working as a proof of work chain for quite some time. There's no real need to go ahead and try to build another chain, especially with people that are not as experienced in the industry, right? That being said, like we saw with GPU miners, where did the GPU miners go? I mean, a majority of them, frankly, went to Ergo. Why is that? Because Ergo is essentially Ethereum, but built from the ground up with better technology, and it is remaining proof of work. So the ASIC guys that were mining Ethereum, they went to Ethereum Classic, right? Because Ethereum Classic makes the most sense. You got a top 100 chain, blah, blah, blah. And the GPU guys went to Ergo. I mean, it's pretty much, that's how it went down. There was no need for these proof of work chains other than to, I guess, make a quick buck like we talked about before. The new ETH W tokens price tumbled as low as $8 on Friday. I think it's $5 right now. And some exchanges that listed the current, on some exchanges that listed the cryptocurrency. A 70% drop from the $30 level where it mostly traded earlier this week. So here's the rival fork thing that's going on. As Ethereum got close to finishing its transition to proof of stake technology with the merge, a shift that rendered miners' process and equipment obsolete, Chandler Go, a Chinese-based Ethereum miner, came up with an alternative plan. He proposed in August to create a duplicate version of Ethereum blockchain with a fork that would retain the mining-based proof of work consensus mechanism after the merge. Everyone who held Ether would be entitled to receive the same amount of the new blockchain's native token, ETHW, with an airdrop. The fork was scheduled to happen the day after the merge. Amid the initial buzz, some exchanges rushed to list a derivative of the potential blockchain's would-be token, including crypto exchange Poloniex. Sun, an investor in Poloniex, became one of the loudest proponents of the proof of work fork of Ethereum, saying it is a tried and tested system for the second largest blockchain. Then, on the day before the ETHW fork, Poloniex surprised many by announcing that it would support a little-known different fork on the network, Ethereum Fair. Now, Ethereum Fair is one that I saw pop up, and I started doing research, and I found this article. Things are very weird right now, but we try to cover it. So Ethereum Fair is essentially a completely different Ethereum proof of work fork. And the token is ETF, and this is the one that Poloniex supports. Extremely confusing, yes. Quote, based on the market situation, consensus of users and the community, Poloniex has decided to choose the fork of Ethereum Fair, which is supported by the community's majority and more proof of work computing power as the main chain for ETHW tokens, the crypto exchange said in a statement on Thursday. Information is scarce about Ethereum Fair. According to the project's Twitter feed, ETF tokens will be distributed among Bitcoin, Dogecoin, Ether Classic, and Class ZZ token holders. So they're not even like, it's not like you have Ethereum, they're copying Ethereum over and you get Ethereum as a result. It's like, we're going to distribute tokens based off of your Bitcoin and Dogecoin holdings? Like, what the is even going on, bro? It doesn't even make sense. Poloniex said users already received the tokens, indicating the blockchain went live. Crypto exchanges such as Huobi and Gate.io also listed ETF, and trading started early on Friday. Go, the originator of Ethereum Proof of Work, said in a tweet that Poloniex made a huge mistake by backing a rival fork. I mean, I think both of y'all are dead on arrival. That's I don't trust either one of y'all. So, like, I mean, two of y'all together, is that less trustworthy or more trustworthy to y'all? I'd like to hear y'all's thoughts and opinions in the live chat and comment section below. Would Chandler Go and Justin Sun teaming up on a single project make you feel better about it, or them splitting it up and having two different projects make you feel better about it? Kevin Zhou, head of crypto hedge fund Galios Capital, predicted earlier that proof of work forks would proliferate after Ethereum's merge. At press time, Ethereum Fairs traded at $17 on Poloniex, and ETHW changed hands at $12. So clearly, Ethereum Fairs doing better at this point. Analysts doubt the longevity of any proof of work fork, but many traders plan to make money on them well before the merge. Their strategy was to buy or borrow ETH to be selected for the airdrop, then after that claim the ETHW tokens. They would dump them on the market. Since the tokens were free, any profits were seen as a bonus for holding ETH. This put a huge selling pressure on ETHW, especially because few big investors ever took the breakaway project seriously. I spoke to a couple of over-the-counter desks, and they're saying everyone is selling. There's no buyers. Kevin Kane, co-founder of digital asset hedge fund BK Coin Capital, told CoinDesk. Go said Friday that CoinDesk, to CoinDesk, that 90% of the miners of Ethereum proof of work network will go bankrupt. When asked about the initial technical problems, he rated the start mediocre. Now, he said 90% of all miners, not just Ethereum proof of work miners. He was saying of all miners, I think Ethereum miners, because Bitcoin miners are a little bit different, right? Even though we are seeing this affect Bitcoin in general. Either way, what do you need to know? Ethereum Fair is Justin Sun's, Ethereum POW is Chandler Go's, and they are two different forks, and they function completely different, with Ethereum Fair essentially being an airdrop that is based off of your Bitcoin and Dogecoin holdings and etc. within the centralized exchange of Poloniex, making it kind of absolutely ridiculous and pointless. And at this point, you couldn't even borrow against it, I guess, like you could on Chandler Go's to make a quick buck and sell it on the exchange. At this point, nobody is buying Ethereum proof of work or ETHW, so mining it is essentially useless. I wouldn't recommend it. That being said, that's not financial advice. You never know what's going to happen these days in these markets, but as far as like ETH POW, I don't see a reason for it to really trade much. And I think Ethereum Classic, as far as the ASICs are concerned, will remain king for now. Now, earlier this weekend, what I did was I had tweeted out that I was getting out. I was taking 60% of my cryptocurrency out. Now, I'm in a weird position, right? I'm a cryptocurrency miner. I got overhead and expenses to take care of. So, yes, my decisions are influenced definitely by cash flow. A little bit different than maybe a buyer and hodler of cryptocurrency that buys and holds until 2025. But the reason this decision was made was because of this particular article that I saw. And it was because the Bitcoin exchange inflows were seeing the biggest one-day spike, since March of 2020. 236,000 Bitcoin enters the trading platform in a single day amid what one commenter calls unusual exchange flows. Bitcoin exchanges have seen huge volumes this past month as price declines led towards renewed interest in trading. Data from sources including on-chain analytics firm Glassnode shows exchange inflows hitting the highest since March 2020. Now, my thought behind this was, of course, biggest inflows means that people are preparing to sell, and I'd rather be able to pay my bills this month that are going to be due on the 1st here in a couple weeks. So I want to go ahead and protect some of my assets, at least enough to pay, the bills for the next few months. So let's go ahead and pull out that in crypto, right? Now, like I said, about 40% still in cryptocurrency. All of my cryptocurrency that I own is either tokens on a proof of work blockchain or, an actual proof of work blockchain in general. Probably a majority of my holdings floating around in the Ergo sphere, if you guys are interested as far as that is concerned, with some in Ethereum Classic, hedging on that, and a lot in Caspa as well. So that's kind of like where I've been floating around with that other 40%. My Bitcoin, my Ethereum, moved all of that out. Obviously wanted to make sure I was out of Ethereum too, all the way. I don't hold any Ethereum anymore, to be clear. On September 14th, over 236,000 Bitcoin made its way to the 11 major exchanges by Glassnode. This was the largest single-day spike since the chaos that surrounded Bitcoin's dip to just 3,600 in March of 2020. The sell-offs in May of 2021 and May and June this year failed to match the tally, suggesting that more of the Bitcoin investor base is currently aiming to reduce exposure. Separate data from analytics firm Santiment, covering both centralized and decentralized exchanges, put the total inflow figure for the week through September 13th at 1.69 million BTC. This is the highest amount of BTC or Bitcoin moved since October of 2021, it added in Twitter comments. As Bitcoin USD dipped to nearly 19,600 this week. Meanwhile, some unusual signals were coming from interactions with exchanges from both larger and smaller holders, according to commenter David P. Ellis. The action follows the curious movement of long dormant coins at the start of September, an event initially attributed to the now defunct exchange Mt. Gox. Returning to trading platforms themselves, Glassnode indicates that exchange balances have increased roughly 80,000 Bitcoins since the end of August. Miners, which in August finished a capitulation period in a typically bullish signal for the market, have also continued to sell holdings throughout the recent weeks. The trend, however, is towards miners returning to a net holding Bitcoin that they earn. So another thing that is interesting here is how many miners with on Ethereum were converting to Bitcoin and then going ahead and now liquidating now that the merge is complete. That is a possibility, right? But there was another reason why I decided to go ahead and get out and make sure I could pay my bills for the month. And that was due to, of course, this week we have our BPS hikes, or our interest rate hikes, being announced by the Fed in the United States. Now, this does affect you globally, internationally, in my humble opinion, because it is the reserve currency. The US dollar is the reserve currency, unfortunately, and that does mean that, you know, as far as prices for cryptocurrency, it does influence it and affect it. And we don't know what it's going to be, but we should find out this week. And I want to make sure that I'm protected. It could be priced in at this point. It depends on what the hike will actually be. But according to Reuters, the benchmark 10-year U.S. Treasury yields jumped to their highest level since 2011 on Monday, as investors adjusted for the likelihood that the Federal Reserve will hike rates, and for longer than previously expected, as inflation remains near multi-decade highs. Data last week showed higher than expected consumer prices in August, dashing hopes that the world's rising price pressures may be in the past. It also made it more likely that the Fed will hike rates another 75 basis points when it concludes its two-day meeting on Wednesday. Traders are now pricing in a 77% chance of a 75 basis point hike, and frankly, in my humble opinion, a pretty high 23% likelihood of a 100 basis point hike increase. Now, what does this mean? More than likely 75 basis points is priced into the cryptocurrency market. 100 basis points is not. So if you're looking at prices right now, and this is not financial advice, but per what most people would tell you, if we hit a 75 basis point hike at BPS, then technically we should probably see the market stay right where it's at, or maybe a little bit lower, but in general, probably right where it's at. If we hit 100 basis point hike increase, then frankly, what you'll end up seeing is, of course, another dump in the market. So Bitcoin could go down further from here if it's tied to traditional markets, which, there's still that debate. Is Bitcoin tied to traditional markets? Is it not? If we look at the traditional halving cycle of Bitcoin, we would say that it's currently priced exactly where we would expect it to be. But also because of everything happening in the world, we tend to see it still kind of tying to traditional markets. So it's a weird spot. I wouldn't say that I know either way. I would always lean towards I know a lot less than I think I know. But investors are grappling to determine how long the Fed will raise rates, as monetary tightening by central banks globally also raise concerns about growth. Now, it's important to understand something else here too. Bad loans are coming into the housing market again. We have record high inflation. Basically, at this point, essentially, by previous definitions, we are in a recession. Of course, according to new definitions of recession, I suppose we are not, but by best I can tell, that's currently what we're in globally as well. We have essentially the, board members of FedEx saying we're going to be heading into a recession. It's going to be getting worse here. And we also have essentially bad loans coming out from housing markets, offering these 0% down with no credit check kind of mortgages, which are not dissimilar, basically bad mortgages, not dissimilar from what we saw as documented by the Big Short in the 2008 financial or housing market crisis. So I bring all of that up because I definitely recommend you go watch The Big Short. I definitely recommend you go look at what's happening with, the mortgages once again, and then take into account that also we have all of this other stuff compounding to put us into a pretty tricky position upcoming here. And then the debate becomes, do you protect your investments with Bitcoin because it will, be the savior and the hedge against inflation? Or do you hedge against it with getting yourself a cash position? And I think it depends on like what happens at the end of the day. Like obviously cash flow is going to be extremely important, and I can't give you any financial advice on it. But in the short term, what I saw was basically an inflow of money or Bitcoin going into exchanges, meaning people were probably preparing to sell. And then the impending doom coming up here of this week of the announcement of what the interest rate hikes will be. So, I just wanted to be in a position where I could pay bills for a couple months. Thankfully, thanks to you guys and the success of the YouTube channel, which is the success of the community. Like I say, I want to be I'm just the mouthpiece for the community. You guys are definitely helping me out and to continue to do my job here as a YouTuber, which I appreciate a lot. So, that's kind of also something that I can lean on. That doesn't mean that I can't, I will avoid a day job though, because, at this point, wrenching's probably going to be a pretty good lucrative day job here at the end of the day, which I have experience in. Let's get into mining profitability after a word from today's sponsor. Now, frankly, I do got to go here actually in 4 minutes. So I'm going to run the ad, and then I'm going to give you guys a little bit of what to mine is, and then I got to go to my son's deal. In fact, I really got to go quickly. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. All right, welcome back, ladies and gentlemen, boys and girls. I am still profitable. Now, the price of Caspa came down a lot, but technically I'm still profitable. Whereas like, I think I'm probably like only 30% of the farm online, but we are still finding blocks. I think so far today we've only found like 1, 2, 3, 4, 5, about halfway through the day, $6-7 or whatever, but it's extremely low. And you can see it on What to Mine as well. Like an RTX 3070 is doing 8 cents a day on Caspa. Now, you can get much better hash rate. Like typically, like this is actually like 100 and this is like 550. So, I mean, technically it's a little bit better than what it's showing there. It's 15 cents after power at 10 cents, or that's at 6 cents a kilowatt hour. But even once we start getting up to like 15 cents, I think everything becomes pretty much unprofitable. So the majority of people are not going to be profitable right now. What does that mean at the end of the day? It's going to be, I think, in my humble opinion, it's up to you. But what I'm going to be doing is mining some basically spec mining coins that are new, that aren't on exchanges, that sort of thing. And stack what I can as far as that goes. I'll probably start or stop mining Caspa here shortly. We're going to be going out to the farm today, so hopefully I'll get a vlog out for you guys as far as everything that's going on at the farm, and kind of have that want video as far as all that's concerned. So definitely tune back in. Make sure you have the subscription and notification bells turned on. And I will be streaming on Twitch here in a little bit after lunch. So come back here to watch live on twitch.tv/blindrun. Unfortunately, we're not doing Q&A, so we didn't get any chat revenue or donations or nothing. So that is why I ran a YouTube ad. Some people were asking if a YouTube ad was running. I think one YouTube ad for an hour of content is perfectly fair. I don't get paid unless I run one. So, you know, it'll make $10 for this entire stream. So if you guys don't mind paying me $10 an hour, that's why I ran an ad. Thanks for watching. Be sure to hit the like, comment, subscribe, and notification bell down below.